All right, all right. Apologies. It's Mark Yusko from Chapel Hill. Apologize for being late. Had a little technical difficulties here and on my half or on my side. So I think it looks like everybody's connected. All right, we're going to dive in. Willing suspension of disbelief. Is it really different this time? So, Jay Powell has shot the rate cut gun and markets are booming and the Trumpster's happy and Jensen's happy. Everybody's happy. It's all new all-time highs. So it was agreed that my endeavors should be directed to persons and characters supernatural, or at least romantic, yet is to transfer from our inward nature a human interest and semblance of truth sufficient to procure for these shadows of imagination that willing suspension of disbelief for the moment, which constitutes poetic faith. Actually comes from Samuel Taylor Coleridge, a poet, talking about, when you're writing something for people, you need to get them to, get out of the present moment and be willing to think of, things that are imaginative. It's migrated, the saying, willing suspension of disbelief, has migrated over the years. It is now life and not art that requires the willing suspension of disbelief, from Lionel Trilling. Since the 18th century, think about that, the immense expansion of the world's wealth has come about as a result of a correspondingly immense expansion of credit, which in turn has demanded increasingly stupendous suspensions of disbelief, from Lewis Lapham, from Harper's. And then it's not disbelief that is dangerous to our society, it is belief. So 6 years ago, time flies when you're having fun. 6 years ago, I did a presentation on Around the World. Many of you were probably there, called Beyond Belief, Why Unquestioned Faith or Belief in Central Bankers May Be Misguided. And I showed the coming money trust cartoon on the left and the new Jay Powell coming in to take over from Ms. Yellen. And my friend summarized it best. I remember a time when I didn't know the names of central bankers. I long for those days to return. There's no answer to the available literature to the question why a government monopoly of the provision of money is universally regarded as indispensable. It has the defects of all monopolies. With a gun, a man can rob a bank. With a bank, a man can rob the world or a woman. I was reading a paper today that Congress wants to replace the dollar bill with a coin. They've already done it. It's called a nickel. And now it's actually called a penny. So central banks, what are they? They are a monopoly on increasing the monetary base in a state, also generally controls the printing or coining of the national currency. They are the lender of last resort. Well, where did they come from? Well, they came from the Dutch. The Dutch created the Bank of Amsterdam, the first central bank. And it's the reason that a country the size of Ohio could be the world's superpower and have the world reserve currency. Because if you can print money out of thin air, you can pay for very large armies to take over the Spanish Armada. Well, the idea spread to the Bank of England, and the UK became the most powerful country in the world. And then the Bank of Spain caught on, and the Swiss National Bank, and now we got the European Central Bank because they're all, a big family over in Europe. The Bank of Japan dominated Asia for a century, but then the PBOC got a bigger and better and badder central bank. Now, look, the U.S., we were kind of laggards, right? We had national banks, the first national bank, second national bank, and then Jackson said, nope, we don't want banks anymore. They're too powerful. They're owned by the European financial families. So we basically went into the free banking era, and basically everyone could issue their own money. Texas could issue their own money. Companies could issue their own money. And it was an unmitigated disaster. And we ended up going back to the future in 1863, 100 years before I was born. And we went back and had a new national bank. Now, the national banks came to power, and this guy, J.P. Morgan, whose dad sent him over to be trained at the London or the British Central Bank, came back and said, I like a little competition. So these trust companies were springing up and they were taking business away from JP. And so he triggered this epic picture that everybody's seen from Wikipedia, on a bank run. So this was the Knickerbocker Trust. And his father-in-law, it's funny how these things work out. His father-in-law, Abraham Aldrich, who was the most powerful man in Congress at the time, created this thing called the Aldrich Plan. And you can't make it up. They went to Jekyll Island and created the creature from Jekyll Island, which was the new central bank in 1913. And Thomas Jefferson said it best: I believe that banking institutions are more dangerous to our liberties than standing armies. If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around these banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. Now, that's from the 1700s, but think about this. Our kids can't afford to buy homes. Now, they're not homeless per se yet, but you've seen the pictures of the people in China who have been locked out of their apartments because their social credit scores don't meet whatever standard, and they've gone to a digital currency and a digital idea, all of which are dystopian nightmares. But all of this goes back to the fact that, look, if somebody controls the printing of money, that is the cause of high prices. It's not anything else other than the devaluation of the currency. So national banks, central banks have been blowing bubbles forever. As JP Morgan said, gold is money. Everything else is just credit. But look, from 1776 to 1913, a dollar was worth a dollar. And he said, but Mark, it fluctuated between 60 cents and a dollar. Yes, it did around the Depression caused by the free banking era and around Civil War. But other than that, it stayed a dollar until the Fed was created. And then we turned it into Jay Leno's nickel and now penny. So I believe the general growth in large financial institutions have occurred in the context of an underlying structure of markets in which many of the larger risks are dramatically, I should say, fully hedged. In 2000, April of 2000, literally right before a 55% decline. At this juncture, however, the impact on the broader economy and financial markets of the problems of the subprime market seem to have been contained by Ben Bernanke. The risk that the economy has entered a substantial downturn appears to have diminished over the past month. Not so much. Would I say there will never, ever be another financial crisis? Probably that would be going too far. But I do think we're much safer, and I hope that will not be in our lifetimes. And I don't believe it will be from 2017. So Ms. Yellen said there'd never be another. Now, back then in 2019, central banks were acting like a serious financial crisis was coming. They were cutting rates like crazy. Government global bond markets were acting as if there was a global crisis looming. Well, it turned out there was. QE stimulus, U.S. equity markets partying like it's 1999. Everybody was happy. But what happened? Lockdowns happened. And we had one of the worst financial crises ever, and we had to bail out the whole world by printing money. So one of the things that was going on back then in 2019, before the 2020 collapse, was that there was massive waves of IPOs. And 15 unicorn IPOs with a combined loss in the previous year of $6 billion were valued at $178 billion. And I said, in 15 years, we'll probably look back and wonder how things could get so crazy. So it turns out that companies that don't make money, taking them public is just a bad idea. And yes, they went up a little bit when we locked down and we were feeding free money back into the economy and people were speculating and gambling on penny stock or on the meme stocks. But at the end of the day, these stocks are now down 30, 40, 50, 60, 80, 90%, as they should have been. WeWork took the cake, right? WeWork, they tried to make up new metrics for, adjusted EBITDA, like EBITDA before you look at our expenses. Well, but that's part of EBITDA. So that went to zero. And I used the Scott McNally quote from Sun Microsystems back in 2000 that if you pay me 10 times revenue, you couldn't get an actually good return because I'd have to give you all my revenues and I'd go to jail because I wouldn't pay my taxes and I wouldn't pay my people. And so Zoom and Beyond Meat and Elastic and PagerDuty, we're at 56, 52, 39, 33 times sales. Forget multiples of earnings because they didn't have any, but they were all multiples of sales. So forget 10 times being crazy and take Zoom off the table, the blue line here. Okay, yes, when we went into the lockdowns, everybody used Zoom and everybody thought it was really valuable. But now, fast forward, even with that big giant move up of 400%, it's still down over 6 years. Beyond Meat literally went to zero up until the last couple of days. We'll talk about that. And, all these stocks, the math isn't mathing. And at the end of the day, math is undefeated. Now, it takes time sometimes to discourage that, suspension of disbelief. But at the end of the day, the math has to work. So tech investors had their head in the clouds. It does not compute. Ha, ha, ha. Who needs boring FANG stocks when you can, invest in the software companies? Well, again, over the 6 years, they've been dead money. So buying them back then was not such a great thing. And I think some of these will actually disappear over time because at the end of the day, you do have to make money to justify a stock price. Now, Beyond Meat, this was the title of the presentation. The valuations were clearly beyond belief. At $13.3 billion, Beyond Meat was worth more than Shake Shack, Wendy's, Jack in the Box, Red Robin, Habit Burger, Good Times, Ruth's Chris, Buffalo Wild Wings, Fat Burger, Ponderosa, Del Frisco's, and Nathan's Famous combined. Well, it didn't stay there. So, NASDAQ stocks in blue, S&P in black, and Beyond Meat, even with the big move off 50 cents up to as high as $6 and then back to 2.5 over the last couple of days, is still down 98+%. So bad. And this was at the time, Tilray, when bubbles burst, previous paper gains go up in smoke, ha, ha, ha. But look, even though there was one more puff on the stock here, Tilray, when the MORE Act was passed, which basically decriminalized marijuana, it's still down 90-something%. So pretty crazy. And bubbles eventually end. I mean, movies, you can have willing suspension of disbelief in perpetuity. But in reality, gravity comes to rule. All right. So we also talked about Bitcoin back in 2019. And we said, look, 2018 was bad. And it was bad. Bitcoin was down 75%. Everything else was up. AMD was up and wine was up and collectible cars and GE was down and Goldman was down. But back in 2019 through August when we did this, Bitcoin was way up over 150%. And we said it was just really starting this move that would follow the S-curve as it was increasingly adopted. And Bitcoin tripled off the bottom in 2019, but the central bankers were just getting warmed up, right? So it went from 3,500 to 11,000. And then when lockdowns happened, it fell all the way in half to 5,000. But today it's 110. And that's because the lady doth protest too much, methinks. There was a financial crisis in 2020 when you lock the world down and mess up GDP and mess up supply chains. And so they had to print the most amount of money. I mean, think about that. 50% of all the money. So we've been a republic for 249 years, and half of the money has been printed in the last 5. That's insane. Truly, truly insane. All right, so let's get to today's presentation. So, I keep doing the kind of update on the surprises with the current theme thrown in. So we thought that the recession might arrive. Polymarket disagrees. Polymarket says there's no chance of recession. It's down to 6%. Now, it was pretty high, 65 plus percent betting odds in April, May, and then Trump did the flip-flop on tariffs and everything was hunky-dory. Now, the problem is that the IMF and a bunch of other institutions are saying, global GDP is probably going to be lower in 26 and 27. That's not necessarily recessionary because it's not negative, but the growth rate slowing is probably not what we all want. U.S. GDP appears strong, 3% in Q2. The problem is one little issue. All of it was AI CapEx. So other than building data centers and companies buying each other's stuff, which we'll get to in a little bit, the circular vendor financing, there wasn't any real GDP growth in the US. The hyperscalers are hyper spending, but it's kind of circular. And, a lot of you have seen this already that, OpenAI is owned partly by Microsoft, and then they invested in NVIDIA, and that they're going to buy a bunch of stuff from NVIDIA, and NVIDIA owns a piece of CoreWeave, and they buy a bunch, and CoreWeave buys a bunch of stuff from NVIDIA, and then they said they'll buy stuff from AMD, and then they're going to also buy from Oracle. Well, at the end of the day, OpenAI has now committed to spending $1 trillion. Just let that number hang there for a second. $1 trillion. They say they're going to spend $1 trillion. The problem is they don't have any money, right? They're going to lose $8 billion this year. They lose $2 for every dollar of revenue they bring in. They're expected to lose $115 billion over the next 4 years. And they only have enough cash to survive 3.5 years. So I agree with Delta Capital. That's not confidence. That's desperation. If there's no way you can make money and there's no way you're going to generate cash, then you have to rely on the kindness of strangers. So willing suspension of disbelief, that's the only way this works. So yes, they raised $40 billion at a $330 billion valuation earlier this year. And they just had this, I love this. They didn't raise a round at $500 billion, which was reported. It wasn't a round. It was a sale by insiders. Okay. The people who know the most about the company to other people like SoftBank, interestingly. And they valued it themselves at $500 billion. Now, again, how do you value something at $500 billion that's losing $8 billion a year and going to lose more in the next 4 or 5 years? I mean, I don't know. Math is hard. So ISM below expansion at 49, and the services ISM, I mean, it is in complete free fall. It's already to levels that we saw in 2020 and the global financial crisis. You could say, based on this, that we're in recession, but nobody wants to say that. But I don't know. It's weird. Leading economic indicators have never actually been this bad, right? Relative to what stocks are saying. So, you can look at this chart later at your leisure, but it's a pretty amazing chart. When you get this type of decline in LEI, which has actually never happened before, to have this many declines in a row, you're normally already in a recession. You notice that the green rectangles are not very wide, but willing suspension of disbelief, we just choose to ignore the fact that the data is telling us that there's something wrong. And so there is no red rectangle. Okay. Auto loan delinquencies Car repossessions, new all-time highs. Credit card delinquencies, not all-time highs, not quite as bad as the global financial crisis, but starting to get there. The Atlanta Fed says, party on. The American consumer says, I might need some help. Hamburger helper sales rising. That's usually a sign. It's one of those interesting indicators of recession. All right, winter's coming. We said interest rates would fall. Polymarket said Powell would cut 25 basis points in September. Traders thought 50. We got 25. Jay the Dove was back. And Polymarket says that he's going to give us another 25 basis points here in October. Yet if everything's wonderful, why would you be cutting rates? That again, doesn't happen normally. But maybe, he knows something we don't. Despite all the rhetoric, M2 is hitting a new all-time high. And the growth rate, the devaluation of the currency, is running at almost 5% a year, meaning they're stealing 5% of our purchasing power every single year. Now, why that's called the golden rate, I don't really know. Because again, from 1776 to 1913, we had zero as the golden rate. We didn't devalue the currency. Now we're devaluing at 5% a year. That seems bad. I don't know. It seems like theft. The consistent devaluation of the dollar means that scarce assets will appreciate. So gold grows about 2 to 3% a year. Bitcoin grows at 1% a year. They should definitionally become more valuable if the dollar is growing at 4 to 5% a year. It's just math. So why is the Fed so obsessed with rates? Well, part of it is the swamp never did get drained like what was promised, and we still have a 1.8 trillion with a T deficit. We're spending 1.8 trillion more than we bring in, despite all the talk about tariffs and all that stuff. We're still spending a lot more than we take in. And that means that our interest expense, because we have to keep issuing debt, and we just hit 38 trillion with a T, our interest expense is now going to exceed defense spending and will become the largest line item in the budget, and no signs of stopping anytime soon. So last time global rates were this high, the global financial crisis happened. China, they make us look like pikers, right? They print money way more than the U.S. Now they're a bigger country and all that good stuff, and they're at a different stage of growth, and their growth rate is significantly higher, right? At 6%. Everybody says, "Oh, don't believe their numbers." I'm like, you mean like our numbers that we're just another number? The Michigan Consumer Sentiment Indicator was just proven to be false. Crazy. Bonds were struggling through May. Basically, bonds were down, TLT was down. But since the flip-flop and the ending of the actual tariff war, there's still been rhetoric around the tariff war. But, TLT's now up 9%. That's almost up as much as stocks. So that is telling us something. The fact that long-term rates are up, in theory, should be telling us things are getting better. But long-term rates are now going down, so that actually could be telling us that things are getting worse. But we'll see. Now, look, Buffett has been hoarding cash like it's going out of style, even though they're making a lot of it every day. And he is underperforming the S&P when I say as usual, I don't mean as usual like all the time. Over long term, he outperforms the S&P because he leverages. So if you look at in a levered S&P, it roughly is the same as Buffett because it's basically just a portfolio of stocks levered by Geico. But when he accumulates a lot of cash, which he has done a handful of times, he goes through these periods of massive underperformance. But then when does he spend the cash? After the crisis. He gets the call, hey, Bank of America needs to be bailed out, Goldman Sachs needs to be bailed out, whoever it is, pipeline company, whatever. So the surprise would be that the bear market comes back. The bear was here for one day. We had one day where the market was down officially 20%. And since then, the rally has been extreme. Mag 7 and triple Qs and the S&P up, I mean, staggering numbers since April, really staggering. And so much for the sell in May and go away. The S&P, it's up 42%. I know it looks like a flat line, but that is up 42% off the bottom. But you compare that to ARK, right, which is littered with some suspension and disbelief type companies, up over 100%. Palantir up more than that. SoFi up more than that. And Robinhood, which is just basically a speculation gambling house, up way more than that. So now the question is, are stocks rallying because pensions are all in, or pensions all in because stocks are rallying? What's the reflexivity? Stocks making new all-time highs just about every week, 28 new all-time highs this year. Yet the fear and greed index is almost at extreme fear. Like, we're not that far from the all-time high. It feels more like extreme greed, but everyone is afraid of this market. So that's something that doesn't add up, and I got to dig more into that. If long stocks is good, leveraged long is better. So we have the highest amount of levered ETFs, and just last week they introduced 5 times levered single stock ETFs. God, what a nightmare that is. That is a disaster waiting to happen. I mean, I guess it's good for fees for the ETF company, but a lot of people are going to lose a lot of money on that. Now, the margin debt, normally I show the total margin debt, and that's a useful chart. But one of the challenges of it is what you really need to know is how much margin debt is there relative to the market cap of the market. And right now we're not at crazy levels. We're in the top 15, 20% of worst, but we're not at the worst. What is now at the worst is the rate of change. And when the rate of change gets this high, we've never not had a meaningful correction or crisis. Now, again, that's not saying it's going to happen tomorrow, but this is a really interesting. And what you'll notice here is there are no times, either at tops or bottoms, where this thing goes to one extreme and then stays there. Now, it may meander in the middle for a while, but when you get to the top or the bottom, it corrects very sharply. So S&P earnings, particularly tech earnings, record levels matching the S&P. So maybe everything's fine. The real problem is that it's not so fine beyond the top few companies. Most of the companies, particularly down when you get to the Russell 2000, they don't make money. 42% of Russell 2000 companies don't make any money. So not only can they not pay back their debt, they can't even service their debt. Crazy. Average overvaluation suggests 61% downside. Again, not saying that's going to happen, but eventually math would say that it will. The chart on the right, this is the biggest suspension of disbelief maybe ever, in the sense that when interest rates were zero and inflation was zero, fine. You can, using zero as a multiple, as a divisor, you could say that stock valuations could be infinite. The problem is with inflation running closer to 3%, we need to be down in the 20 times or 15 times, or in that, dark teal color in the middle. Not at this crazy, 2000 light teal, or the single purple dot at the top, which is where we are today at 43 times. That will not end well. I can't tell you when, but that will not end well. The Buffett indicator, right? If you think about it, the market cap of stocks should roughly equal about 70% of GDP because it costs money to make money. Maybe you could argue that with tech and productivity and all that, I mean, you could argue, I wouldn't agree, but you could maybe make an argument that 100 is the new normal or the new abnormal, but 200%, that's just stupid land, right? That is complete suspension. NASDAQ stocks, complete suspension of disbelief. And again, I mean, how long can you stay at the far extreme of anything? Think about running, right? How the average person, how long could they run, a sub 4 minute mile? Well, most of us could never do that. But even the elite athlete, there is a limit to how long they can stay at that pace. So not everything is rallying. Transports are flat year to date. FedEx, UPS down big. Why? Well, again, maybe people aren't ordering as much stuff on Amazon. Amazon's actually down this year, double digits. So something's going on underneath the surface. And there's something called Dow theory, which says if the market makes an all-time high, the Dow Jones Industrial Average, but the transports don't, then you're going to have a correction within some period of time. Again, don't know exactly when, but my guess is it will happen. A couple months ago, the green arrows, we talked about that healthcare had been in sick bay. Forget, the markets. The markets busted out of sick bay, but they were replaced because the hospitals need to fill the beds with healthcare itself. But we did say that UNH kind of looked like a little bit of a value. And I don't like UNH. I don't think they should even exist. I don't think we have healthcare in this country. I think we have sick care, and claims processing companies shouldn't have tens of billions of dollars of market cap. But that said, it looked oversold and ripe for a bounce, and bounce it has. Laws of Gods and Men, MAG stands for Must Acknowledge Gravity. Smart money is suspending their suspension of disbelief. They are selling, and it's actually one of the largest weeks of selling we've seen in a very long time. That has some information content. I'm not saying that, hedge funds are the only smart people, but, they're selling, as are institutions. The triple Q hadn't closed hadn't closed below, or has not, closed below its 50-day moving average for over 180 days. The only time that was longer than that was 1999. Again, not saying that that means it'll end the same way, but, we are now at levels of overweight in a handful of stocks that we've seen only a couple times in history. The Nifty 50 in the 60s leading up to the 73 crash, and then the late 90s leading to the 2000 crash. So will we have another crash? I mean, someday, but I don't know when. Curiously, the Mag 7 outperformance is waning. The Mag 7 are actually up in line with the market in the mid double digits. What's really surging is this thing called AI. Now, there's lots of different definitions of what is AI. Is it a company like Palantir or Oracle? Oracle's a database company. I'm not quite sure how you call it an AI company, but they are saying they're going to build some data centers related to AI. Meta, should change their name to Met AI because all they talk about is AI. Amazon, they integrate AI. It's one of the best AI use cases around. I'm not sure it's an AI company, but and then you've got, the nuclear power companies that everybody thinks are going to be very valuable because AI data centers are using so much power. Broadcom, clearly an AI company. NVIDIA, clearly an AI company. They make the chips that run the AI machines. Now, here's the thing. AI valuations have surged into suspension of disbelief territory. We've just never seen this kind of concentration and this percentage of total GDP, right? Even at the peak in 2000, the big dogs, the big companies were only in the 40-ish or mid 30s range of GDP. Now we're double that. And that's despite the fact that AI usage, according to some big consultants like Bain and MIT, is starting to roll over. Like, people tried it. They tried to get everybody to use ChatGPT, and productivity didn't actually go up as much as they thought. So now they're cutting the seats. I don't know. That seems bad if you're a subscription type company. So this is the big one, this infinite money glitch. This is causing serious cognitive dissonance. I say for investors, but mostly for me. I don't understand how you can commit to something that you can't pay for, where the company that you're committing to doesn't have the things they say they're going to deliver, and they don't have the money to build those things. And then even if you could build them, you can't get the power to power them. And so, but the way it works, right, is you make deals to spend money you don't have, but you get the money by selling the investment that you get for making the deal. So they announce the deal in AMD and they get warrants for free, and the value of AMD goes up. So now they're in the money on the warrants. So I guess they could sell theoretically, but if they sold, then the price would go down. But it it looks like an infinite money glitch. It's going to end badly. I can't tell you when, but it's going to end badly. Retail investors, feeding frenzy, they're YOLOing. Palantir is the new Tesla. Everybody loves this company, sells it, I think, over 100 times revenues now. Makes some of the other companies like NVIDIA seem cheap. Carvana, every single day, like literally every single day, the owners of Carvana, the father and son, are selling Carvana. And yet this thing has gone from down 99% to up 10,000%. This company's probably worth zero, literally, the equity. I mean, they're not a bad company. It's just there are a lot of companies that sell used cars, and they're not very good at it in terms of making money. So nuclear energy stocks, this is complete suspension of disbelief. This company, Oklo, $20 billion market cap, zero revenue. Think about that. No revenue. It's founded by a husband and wife team who did study physics, but neither of which actually have any real nuclear engineering experience. They're not published researchers. I think the husband might have been a junior, like he was named on a paper when he was like a freshman or sophomore in college, but they claim to have a way to create a mini nuclear reactor. Okay, great. Ideas are cheap. Execution is hard. So, okay, let's apply to the agency that allows nuclear permits. So they did their application and it was rejected. Little detail. But then they took a photo op of groundbreaking in the middle of this cornfield. But you can't groundbreak because you don't have a permit. You can't actually build. So that was just theater, literally theater. So this is the crowning achievement of disbelief. And Martin Shkreli is all over this, and as are a bunch of other shorts. And look, this company's worthless, right? And yet every single day, this husband and wife sell shares and they feed the ducks. Now, some of the nuclear companies probably will make some money, and uranium, the fuel companies, I think will make some money, but you can barely see those lines at the bottom. This is going to end so badly, I can't stand it. And the only thing more unbelievable than nuclear FOMO is quantum FOMO. So these quantum stocks, again, these are companies with no revenues. Some of them have, a couple $1 million of government research grants, but no revenues, no customers. Most of them don't even really have an idea of what they're going to build. Like the head of Ionic, which is the King Bee, was it doing a speech saying they're 10 years from having a commercially viable product. And yet these companies have multi-billion-dollar valuations. And, Martin Shkreli went short these things and clearly got his head ripped off as they went totally parabolic, massive short squeeze. Then they rolled over for the last week and were down 20, 30, 40, 50%. And then yesterday or this morning, I can't remember when it was, Trump says, oh, no. We'll buy some. The government will buy some. Now, they're going to buy $10 million. Okay, $10 million in a $20 billion market cap company doesn't do anything. It's so people want to believe that quantum computing is going to work. Someday it may, but not today. So now as watch has ended, the dollar we thought would have a tough year. Dollar is having actually its worst year almost ever, not quite ever. Did a little worse a couple times in the 20s, but it's bad. Dollar gave back all of the gains from 2024. It's on the verge of now being negative for 10 years. Now, the government is trying to save the dollar, as they should. The fiat currency is a very powerful thing for a government to have. So they passed, this bill to basically allow stablecoins to exist and thrive as long as they own treasuries. That's actually not dumb. I mean, that's actually pretty smart. Two big winners from the Genius Bill are Coinbase and Circle, both of which have had massive increases in valuation. Ethereum might be the biggest winner in all the stablecoin stuff. I mean, Solana's there too, but Ethereum is really the big winner. And Tommy Lee, not Tommy Lee, Tom Lee. Tommy Lee is the actor, but Tom Lee is the finance guy. He turned this Bitcoin mining company into an Ethereum treasury company. They now own, 12, $13 billion of Ethereum. It's pretty impressive, actually. Second largest treasury company to MicroStrategy. Another portfolio company, Figure, Morgan Creek Digital portfolio company, one of our very first investments. It's in all of our funds. Actually, that's not true. It's in funds 1, 2, and 3, plus an SPV. Super excited about this. Company went public at 4.3 billion. It's trading about double that today. This is a play on tokenizing the world. And this is the future of finance. Congratulations to Mike and the team. And we're super excited to distribute shares back to people, or cash back to people, whichever you want, in February when the lockup expires. So oil prices have collapsed on trade war fears and supply increases. Turns out oil's not truly scarce. And in fact, if you price Bitcoin in oil, it just made a new all-time high. It's kind of an interesting way of flipping it on its head. Normally you price Bitcoin in some asset, some currency like dollars or yen. But if you price it in something that's equally not scarce, like oil, it gets more and more valuable. So the EIA on the left, their blue line, they nailed this, right? They said oil was going to trend down into the high 40s by 2026. It's a pretty scary prospect for oil companies. And look, Donald Trump has said he wants gas prices at $2 because there is a perfect inverse correlation between presidential popularity and the price of gas. And midterms coming up next year, I mean, that all lines up really, really well. Supply is outpacing demand, and that's really not an OPEC story. It's a U.S. story. U.S. oil production, I mean, it's a miracle. That chart on the right is a miracle. We went from 7 million barrels a day to coming up on 24 million barrels a day. I'm sorry, 22 million barrels a day. That's extraordinary. I mean, we tripled U.S. oil production in a decade and a half. Bravo. I mean, that's technology writ large. So oil stocks bottomed on the tariff flip-flop. They surged 30% back above the 200-day. I don't know. Those actually look like pretty good charts. So despite the fact that oil prices are falling, the oil companies, I think because of technology and things like AI and other things, like real use cases of AI to find oil better and to move it around more efficiently. I don't know. Maybe there's some there. Markets even pounded the MLPs, which makes no sense because this doesn't matter what the price of oil is because their contracts are signed long in advance. But, flat year to date, but you're still getting an 8% yield. So I still think it's better than a money market. Europe, European stocks surged. I mean, if you would have said a year ago that European stocks would be the best performers, people would have laughed at you. Well, they did laugh at us. And European banks being better, I mean, that has been an incredible trade, up 70 plus percent. Fading a little bit here. Most didn't have the emerging markets and peripheral Europe as their best performing markets. Who would have thunk Greece is the best performing markets here? The Greek banks are up almost 100%. Spain, Italy, way higher than Europe as a whole, and those are all way, way, way higher than the S&P. Japan, look, we believed that the new head of the central bank in Japan, Ueda-san, was gonna do what he said he was gonna do, and that he would strengthen the yen, and that would hurt Japanese equities. And we were right for the first half of the year, but when Trump flip-flopped on tariffs, this guy turned into Kuroda-san writ large, and they have weakened the yen, which is exactly what Japanese equities needed. So, we're going to get this surprise totally wrong, but, all the Japanese equities we own have been doing really, really great, which is fantastic. And new all-time highs. Tech stocks in Japan absolutely crushing it. Now, look, Nintendo deserves to crush it. They just released their new game, and it's fantastic. But, Sony, SoftBank, all outperforming U.S. tech stocks. So Japan, poster child, what happens when you over-financialize an economy. If you look at gold priced in yen, it makes gold priced in dollars look like, a garden party. So that is true willing suspension of disbelief. Surprises that China doesn't back down, that they out-Trump Trump, and that Chinese equities go up. China's trade surplus, despite all the threats of tariffs, is actually higher today than it was before it all started. So they, again, Trump. Taco, right? Trump chickens out, right? He never goes through with what he threatens. So that's helpful for China, despite all the volatility. And there was volatility back in April. You can see it on the left-hand and right-hand side. But since, all of that, it's just been straight up Chinese equities, and they're up 3 times the S&P. So it's been a great trade, and David Tepper is really, really happy. Animal spirits, we said China's A shares were on the verge of this breakout earlier in April, and man, have they broken out. It is extraordinary how they've broken out. The terrific 10, and I apologize, big charts got acquired by MarketWatch, and MarketWatch sunsetted big charts. So now I can't do more than 4 things on a single chart. So I can't do the whole terrific 10. So I apologize. Or at least I haven't found another charting service that'll let me do that. But now I'm back to stock charts. Oh, look at that. And I said big charts, but it's not stock charts. Bitcoin's following this S-curve adoption. It's still early. We're at 3% adoption. It's going to be a long time before we get full parity with the internet. BlackRock ETF, fastest grower of all time. It's now $100 billion. And look, Bitcoin's big at 2 trillion with a T from zero 16 years ago. But it looks pretty small when you compare it to gold at 30 trillion, or that was 2 days ago. Now it's less than that. But when you look at it compared to total assets of 1 quadrillion in the world, 1,000 trillion, it's not very much. So long way to go. Now look, Bitcoin was rocking. It was doing great. It hit resistance at the all-time high of 125. It had a correction. It rallied back to a new all-time high, 126, and now it's pulled back. Now it is bouncing off support, right? It's bouncing off that 200-day moving average, so that's a very good sign. There are some that believe that 126, October 6th date is the peak for this cycle, and we aren't going to make it to 150. We're probably not in that camp. If you look at Bitcoin prices are highly correlated with global M2. You can just see the orange line and the blue line have been very correlated in the past with a little bit of a lag. Gold, it's not quite as correlated, but eventually catches up. It goes flat and it catches up. And what's interesting about the gold chart is look how gold was definitely flat there for the better part of 6 months and then just exploded higher and caught up to global liquidity. as it should, right? Because gold doesn't change, liquidity goes up. And so when divide it, it should be more valuable. Well, that's exactly what happened. And I think we're on the verge of a meaningful breakout. We'll see. The Bitcoin power curve said we'd get to 215K by November, and then the bear market would start and we'd fall, 50+% all the way back to 100. I do think we'll have a fall, but the fair value today is 91K according to Tim Peterson's Metcalfe's law model. So we don't have as far to fall. So if 125 really was the peak, 125 back to 91, that's about a 30% decline. Maybe we could get a 40% decline, heck, maybe even a 50% decline. But that would only, well, I think getting much below fair value is unlikely. Now, we'll see how this plays out, but that's what it says. There are some that argue that I'm wrong, right? That the 4-year cycle is gone. FOMO has been replaced by institutional demand, and that we're just going up only forever. And we're probably going to go up only forever at about the same rate as M2 grows, which would be about 5 to 7%. I'm compelled by that argument a little bit, except when I see what happened in the last couple of weeks when Binance can move prices, by $10,000 in a day. So that bothers me. So I don't think all the retail's gone. I don't think all the leverage is gone. And I don't think all the volatility is gone. 100 firms globally, actually it's 138, have Bitcoin on their balance sheet. Relentless stacking, Metaplanet number 4, Pomps ProCap number 21, kind of auspicious place to be at 21. Look, this is a real chart and people are feeling the pain. So there's really not that much logic to having an MNAV, a value market cap to NAV, much, much higher than 1. Now, some of these stocks got into the 3, 4, 5% range, and that was just too high. And they're all going to trend down toward MicroStrategy in the bottom left. And this chart's a little old, and they really all have. So all those dots have kind of found gravity in the lower left. There's a bunch of Bitcoin treasury companies selling below net asset value today. Top dog, MicroStrategy, it's in a wicked correction, yet despite that correction, it is still outperformed everything from NVIDIA to Tesla to the S&P to Meta in the Bitcoin era. So yeah, it has some volatility, and yes, it's under pressure. How do they outperform Bitcoin? Because they use a little bit of leverage, and there's an arbitrage through their capital structure. So they have preferred equity, they have convertible bonds, and this STRC thing is really amazing. Has a variable dividend ranging between 9 and 10%. It's about 10.25% today. It's backed by Bitcoin, so it's got a 6 times over collateralized backing. So it's way better than buying a money market, way better than buying a high yield bond. I mean, you can make 10% with, 6 times over collateralization. It's pretty good. Now, you give up all the upside of Bitcoin, but if you're using it not as a savings tool, but as a liquidity tool to replace a money market yielding 4, why wouldn't you do that? Metaplanet running the MicroStrategy playbook, except people, pushed it way too high as an MNAV, got all the way up to 10. Now it's back right around 1, some days even below 1. That's silly. Their preferred shares program is going to start January 1st, and they are going to tap into the largest fixed income market in the world where yields aren't 4%, but are closer to 1 to 2%. And if they can, guarantee people 6, 7%, they don't even have to give 10. You can give somebody 6 instead of 2. They will raise a ton of money and buy lots and lots of Bitcoin, and your Bitcoin per share will go up, up, up. Gold, we thought gold would get to 3,000. It sounds quaint today. It blew right through our 3,000 target, but then it got stuck. And then in September, suddenly it went crazy and it got super oversold. and then actually had the largest loss in history 2 days ago. Gave back $2.8 trillion in 2 days. I mean, that's bigger than Bitcoin. So it gave back more than a Bitcoin in of market cap because it got crazy overbought and a huge short squeeze. So, JP Morgan and those guys have been short this asset forever. They finally got caught with their shorts down or shorts up, I guess, shorts up. And they got squeezed and it got way, way, way overbought and was due for a correction. It's probably still going to correct from here, but it's still a great asset. You should own some in addition to Bitcoin and others, but it's a pretty amazing story. Rock beats paper. Gold beats everything this year. It beats the NASDAQ. It beats the S&P. It beats bonds. And over 25 years, but that's not really true. What that is devaluation. That is willing suspension and disbelief. That is us believing that inflation is good for us. It's us believing that the dollar is equivalent today. I mean, just think about all the things like life insurance. Like you buy $1 million of life insurance and then, 30, 40, 50 years later, someone passes away and they pay out $1 million. Well, it's not $1 million. It's like one of the dumbest things you could ever do. Now, there's a company called Meanwhile, you can buy protection in Bitcoin, which will do the opposite. It will go up as the dollar devalues. So there are all kinds of things like, owning bonds when you're young. Like it should be against the law to own bonds in your 401k. Makes no sense because inflation is going to chew up your gains. So gold looks like it beats stocks, but it's not necessarily true. It's just that the dollar money illusion makes stocks look like they went up, but they didn't. The scarce asset became more scarce, and been a good thing. So humans love to buy what they wish they would have bought. Gold flows up huge after the price ran up. This is a picture from a week ago, literally at the top at $4,400. People lining up around the block in Sydney to buy physical gold. And then it went down 7% in 2 days. Sad. Gold's been money, but the gold miners truly scorching. One of the best performing assets all year. We've loved gold miners for a long time. The revenue growth, free cash flow growth, huge. All right, our latest podcast on Around the World is up. This one will be up next. AI Revolution. This was a great conversation with Will Graves. You do not want to miss this. There's just so much going on in the AI revolution that you should learn about and dig into. And then we do want to shout out Catherine and Andy. They won the CIO Innovation Award last week in New York City. We're actually there to celebrate with them. And we talk about that on the podcast. X and I cheer them on and talk about a bunch of other stuff. So we'll do that every week. We'll do that again tomorrow. And new book. I listened to Jeff Busgang 2 days ago in Atlanta talk about his new book. He's with a firm called Flybridge Ventures. He's a professor at Harvard, expert on AI. And this is an amazing story. And he paints a really incredible picture of, well, incredible and terrifying at the same time, of what agentic AI means for the future, what it means for labor, what it means for companies. Companies are going to hire more agents than humans, which is really kind of an interesting concept. Companies that integrate agents into their business are going to be super profitable and great investments. So lots of good stuff there to talk about. All right. I didn't see a link to the slides. So the problem with the slides is how big they are, Thomas. Microsoft has this stupid bloatware thing where what used to be, 5 gigabytes is now like 50 gigabytes. But we can definitely get a link to download. So if you email Evrana, E-V-R-A-N-A, E-V-R-A-N-A at morgancreekcap.com or L Jacob, Leslie Jacob, L-J-A-C-O-B. They can get you a link to the slides. We also post the slides on the Around the World channel. Heard said recently the gold and Bitcoin respond very directly or very differently with gold responding to uncertainty and crypto liquidity. You know, people will try to explain short-term movements in lots of different ways. And the reality is gold and Bitcoin are the same. They're money, right? They're an asset that exists in the absence of a liability. And therefore, they never change. One Bitcoin is always one Bitcoin. 1 ounce of gold is always 1 ounce of gold. What changes is the currency that you need, whether it's dollars, yen, bolivar, whatever, to buy that 1 ounce of gold or that one Bitcoin. So they are exactly the same. And yes, there are certainly, in some cases, different types of investors in the different assets. I mean, there are certainly people who are in gold and they only own gold. They don't lever up gold. There are certainly some people that just buy Bitcoin and they don't lever up Bitcoin. But there are some people in the Bitcoin market that unfortunately go into the futures market and go in the perps market and use big leverage. And so when a speculative liquidation happens, you can get a short-term price movement in Bitcoin that's different than gold. But that doesn't change the underlying fundamentals of the two assets. The second thing is, if you go back to March of 2020, they both dropped almost exactly the same amount. Because why? Well, you had a big liquidation. Nobody knew that the lockdowns were coming. I mean, somebody did, but most people didn't. And so everything dropped. Well, when everyone has a lot of leverage in their stocks, because margin debt was super high, and they have to make margin calls, well, they can't sell the stocks because the stocks went down. So they sell what they can sell: treasuries, gold, and Bitcoin, because it's liquid. So in those types of situations, they do correlate exactly. This year, there's been this big short squeeze in gold. That's the only that's why it's had this weird updraft. And the fact that that's been at a different time than the deleveraging in Bitcoin. People can explain that, but I think it's noise, not signal. What's been good or great in 25? Look, 2025 has been a great time to make money for investors. Hopefully people took some profits. I mean, there have been a lot of things. Like, here's the crazy thing. The most shorted basket, right? So the companies that the smart money, in air quotes, institutional investors, short sellers, think are the worst companies. The companies that are losing the most money, have the worst prospects, bad management teams, total frauds. Those stocks have outperformed all the other stocks by orders of magnitude. I mean, it's been crazy. So that was a great trade. I can't do that trade. I'm physically a value guy, genetically a value guy. I can't do it. I wish I could sometimes, but I just can't. Like, I could never buy a company like Oklo, right? I don't care how far it goes up. I mean, it's gone up 600-700%. But it's it's not even a Ponzi scheme. It's just a scam. It's a lie. There's no company there. There's no there there. There's no business there. There's nothing. And yet it's a public stock and people trading it and it went up. Look, I think we're closer to the end of willing suspension and disbelief than we are at the beginning. So, closer to the end of the movie than the beginning. Maybe we have a double feature. I don't think so, but there could be a bonus scene, like we have to sit in the theater for 5 minutes through the credits and wait for the bonus scene, like at the Marvel movies. That's kind of cool. So maybe that's where we are. That's probably a better analogy. Examples of top in stocks or crypto while sentiment. Great. Fantastic question. So are there examples in history where you could have a top in a market when sentiment was so negative? And the answer is no. The interesting thing is there's so many new sentiment indicators that I'm not sure which one we should actually trust or use. For the stock market, there are a bunch of sentiment indicators that are still wildly bullish. Now, there are a bunch that are wildly bearish, and that usually means you're going higher. Um, but generally speaking, your point is right on. In Bitcoin, in fact, there are 30 indicators someone came up with, and actually all 30 are still green. So that's kind of crazy. Um, I almost think kind of like with October, where everyone thought it was going to be Uptober, and it's actually May finished down for the first time. Um, I think the fact that everyone assumes all 30 are green means we can't peak here. I think it's possible that we did have a short-term peak. All right. Junk is up before the collapse. Yeah, look, Anthony, that's exactly right. I mean, like they say, what there's it's all been done. You know, the Bare Naked Lady song. You know, there's only so many chords that most people play in music, and there's only so many stories that people write in a rom-com. And you know, like J.K. Rowling, everyone said J.K. Rowling just stole the same ideas from other writers. Yeah, but her writing was incredible, and her books are great, even if it's the same theme or the same thesis. I mean, there aren't that many. I mean, boy meets girl, girl meets boy and girl get married, boy and have kids, or wolf chases girl. I mean, there's only so many stories in the world. It's just like I say all the time. All the self-help books and all the management books were all written 2,600 years ago by Socrates and Seneca the Younger. So there's only so many ideas in history. So I definitely agree with that. Um, and yeah, I think history will rhyme. I do think at some point all of those meme stocks are going down, and companies with no revenues don't deserve $20 billion market caps. They don't even deserve $1 billion market caps. They should have tens of millions of dollars of market cap, and that's a long way down. They need to look like the Beyond Meat chart. That's so. We went from beyond belief to reality, and when willing suspension of disbelief dissipates, and finish up with the fairy tale, and the little boy says, "Hey, why is that guy naked?" When the emperor has no clothes, it ends badly. All right. I appreciate it, Anthony. So, all right, with that, I will let everybody go, and we will be back again soon. And it's interesting. I appreciate it. It says great energy. I did this from my new stand-up desk, so that I'm trying out, and so maybe that's it. Maybe I'm yelling louder because I'm more uncomfortable standing up. But everybody have a good Halloween, and we'll be back pre-Thanksgiving to talk some more. See y'all.